Really excited to welcome back Terry Papineau to the show. Terry is 100% invested in uranium. He has been since 2017, so he was very early to this trade. It obviously went up hugely in 2021, and now it's pulled back. So really want to pick your brain on how you're thinking about this market, because a lot of people are really freaking out right now because the market's come down. So what are you doing?
Well, first, I'd just like to say greetings from beautiful French River, Ontario, where I spend most of my time in the summer at our cottage, and I get to play golf 3 or 4 times a week and just really enjoy myself. So life is beautiful.
Yeah.
But with regards to your question with the uranium sector, it's been a tough, very, very difficult 1 year since Russia invaded Ukraine, since the world markets have basically really gone into risk off mode with very aggressive interest rates going up to try to tackle inflation. The general markets are just down, and basically the uranium sector, well, my portfolio is down about 60% in that period of time. So it's difficult to watch. And it's also sort of amusing to see some of the reactions on social media for some of the people that were basically chasing the story when the story was hot. For example, in 2020 and in basically the fall, third quarter, fourth quarter of 2021, when it was just smoking hot, a lot of people came into the sector at that time. And unfortunately, it was the absolute worst time to get in. So the people that came in those time periods really suffered quite severe losses. It's understandable that people are frustrated with the sector. People, are skeptical with the sector. People are saying, that people are telling us day in and day out that the fundamentals are good, but we're just not seeing it with the uranium equities themselves. But the real good news in the sector, and I've been harping about this in the past for the past year, is that even though the general markets are trying to get inflation under control, interest rates are going up, money is poured out of the equities, the real good news story is that the metal itself, uranium, the commodity, has not only remained constant, but it's gone up in price. So that's great news for a sector. So at a time when almost everything else is going down, like oil has gone down, gold has stabilized, but uranium, in terms of a commodity, it's one of the few commodities where the price has actually gone up over the past year. And there are very, very strong fundamental reasons for that. And that's what people should be paying attention to. So why is the price of uranium going up when the equities have gone down? They've suffered the general market. So there's good reasons for that.
This is what I love doing right now, is investing when everyone else is afraid, right? Because we know why it's falling. Every single industry is the same concept. Why are biotech companies falling? Why are electric vehicle companies falling? Why is everything falling except for like five different names? Because of the macroeconomic environment. So we know it's not going to last forever, this downturn. Eventually it's going to turn back up. Uraniums are probably going to perform like they did in a more favorable macro environment when things turn around. So we just get to research and invest right now and buy cheap, essentially, right?
This is really a buying opportunity.
Yeah.
I wish I had some dry powder right now. I don't, but because I would be adding to most of my positions right now. The just to get into the good news here is that there's been a supply demand imbalance for a few years now. There's just not enough supply to meet the demand. The demand is about 180, 185 million pounds a year. The supply for the past few years has been about 125, 130 million pounds a year. So there's a huge gap there. Inventories have been drawn down. There's been some mobile inventory that's also been able to meet that supply gap. But that's dried up considerably, which is one of the reasons why the spot price has not only remained constant, but has gone up. And it's sitting at about $56 a pound right now, the spot price. And the reason for that is because finally, what we've been talking about for years and years and years, the utilities are going to need to come back to the contracting table and sign long-term contracts. So for the past 5, 6, 7 years, they've been contracting way below replacement levels because they had access to cheap supply on the spot market because it was oversupplied. But that's basically that really excess secondary supply has dried up. And so we've seen the price of the spot price move up to $56 a pound. There's really interesting stories out there where there are RFPs that are put out for 3 million pounds that can't be filled. There's just not enough inventory, or the price is not what the utility or the client is willing to pay. On top of that, with the contracting cycle, so far this year, 116 million pounds of uranium has been signed into long-term contracts. So we're still not at the replacement rate and the restocking rate, because at some point in time, the utilities are also going to restock as they dwindle down their reserves. So, so there's that demand that we've been saying that was going to be coming for a few years now is here now. So there's just really I don't see any turning back in terms of the price of the commodity itself. Sure, we might lose, you know, $1 here, a couple dollars there on the price of the metal, but halfway through the year, and there's already 116 million pounds of uranium that's been contracted. So there's also the news with regards to the nuclear sector. So not only, well, before I go to the nuclear sector, let's just stay on supply demand here. But the supply demand picture looking way better, way better than it did when I started investing in 2017. You know, it's going to increase. So just to give you an example, the demand is going to increase. China is currently building 21 nuclear reactors. They've got 21 under construction. They've come out and said that between 2025 and 2030, they will be starting up 10 to 12 nuclear reactors per year. So over a 5-year span, that's 50 to 60 new nuclear reactors that are going to be brought online in China alone. France, and this is a major story that came out, announced that there are 54 nuclear reactors. They've been licensed for 39 years, okay? They've announced that they're going to extend the licensing for these 54 nuclear reactors for an additional 20 years, up to 60 years. So that's like 54 new reactors that are creating demand. So those supply demand projections that some of the service providers put out, which are typically very conservative, don't take into account the extension of these 54 nuclear reactors. Now, on top of that, France also announced that they're going to build out 14 new EPRs, reactors that are going to be built. So they're extending the life of those 54 reactors for 20 years. They're building 14 new EPR big reactors that consume quite a bit of uranium per year. That's additional demand in these supply demand projections that wasn't there before. Belgium just announced that they're going to extend the life of 2 of their nuclear reactors. I think it was just yesterday, John put out a tweet explaining that in Michigan lawmakers put in their budget for next year, they put in $150 million so that Palisades, the nuclear power plant that was shut down, it was I think it was last year, to restart that power plant. So the company that operates that power plant have said that they need $300 million to start it up again. So the lawmakers are putting in 150, and they're hoping that the federal government's going to kick in some money and they'll get the rest through loans or some other means. But these are all like just stories that we couldn't have dreamed of in 2017. Nobody thought that this was going to be possible, because back then in 2017, 18, 19, 20, nuclear power was just seen as a dead industry. And, everybody thought there would be wind and solar, and the invasion of Russia into Ukraine, and the German experience, that you just can't do it with renewables. Renewables means you also have to burn coal and natural gas, and it's more expensive, and it pollutes more. So these are just outstanding news events that reaffirm my commitment into my 100% uranium position.
So, yes, supply demand, unbelievable, serious growth in demand. We've seen the chart that is conservative that shows going out because of all these nuclear reactors coming online that demand is just going to far outstrip supply. So it's kind of like a no-brainer, especially because now it's a green energy. So you have the big funds able to invest in the space. So there's just so much going on. And you're right, that is exactly why the price has gone up and is staying up, unlike most every other commodity or asset in this environment. And so it's really just a matter of time. The question is, what's going on with the miners? Because that's like probably the most important question. That's what everyone's asking right now. Like, why are my miners down? But we talked about the macroeconomic fundamentals. But let's talk about the fundamentals of some of these miners. Like, what is going on with them?
That's a great question.
Yeah.
Just before that, there's something that I forgot to add to that supply demand scenario, and those models that show, that there's just not enough supply to meet demand,
Yeah.
and new mines are going to need to come online. That demand, those models don't take into account another really exciting new development in the nuclear space, which is the construction of small modular reactors. It doesn't take into account any of that. So, Ontario announced in December that they were starting the construction of a small modular reactor. They're one of the first provinces to come out with that announcement, and we know that there's going to be more. Bill Gates with TerraPower and Warren Buffett have said that they want to build one in Wyoming. Take out a coal plant, put in a nuclear small modular reactor. So we're just on the cusp of that new technology and that new age in nuclear to begin. And so that's going to create new demand as well, which is just going to exacerbate that spread between the supply and demand, and highlights the fact that the price of uranium has to go up. It has to, and it will. So with the miners, that's a very good question. Yeah, it's been extremely frustrating, as we've said. It's been a really tough year since Russia invaded Ukraine. Like I said, my portfolio is down 60%. It's not fun to go through. However, the fundamentals have just not changed. And I know people are tired of hearing that. Sorry, the fundamentals have changed for the better. And I know people are sorry, tired of hearing that, but it's true. So, as you know, my portfolio consists mainly of a basket of explorers, and I've said each time I explain this, it's not investing; it's speculation when you're putting money into explorers. And it could also be described as speculation when you're putting money into developers, because they're just spending money at the moment. They're not making money. So you're speculating that they'll be able to, ramp up production and get contracts and sell their material and one day start making money. So that's what my portfolio consists of: about 60% explorers, 40% developers. And most of my explorers, if not all, are in the Athabasca Basin. And I have some developers, past producers in the United States, and some developers and past producers in Africa. With regards to the Athabasca Basin, I can speak specifically about the explorers. So right now, what the explorers are trying to do is trying to raise money to be able to go out and explore. And it's been extremely difficult for them in the past 2-3 months, where there's just no love in the sector. There's hardly any money in this sector. So the explorers that have not, had good drill results in the past, where they haven't, identified uranium in the core, have had a hard time raising money. and may not be able to explore this summer unless the conditions change. So that places them in a very difficult position. On the one hand, I understand because they don't want to, just give away the shares when they're raising money at ridiculously low prices where, they have to increase the outstanding shares by a ridiculous amount. So they want to kind of protect the current shareholders by not diluting too much. But on the other hand, they can't get the money, the cash they need to go and do what they're meant to do, which is explore. And because of that, their share price has suffered quite a bit. The other category of explorers are the ones that have had success in exploration. For example, Baselode Energy and F3 Uranium. They've hit uranium in past exploration programs. So they were able to raise money and continue that exploration programs this summer. So I know for a fact that both F3 and Baselode have drill rigs on the ground right now in the Athabasca Basin. Baselode Energy, their deposit is very, very different than F3's deposit. We don't know the size of the deposit yet. It's shallow. It's a deposit that could be mined open pit if there's enough material there and the conditions are right. And these are all ifs again, so it's all speculation, but that's sort of the plan. So what they're trying to do is they're trying to, number one, determine exactly how many pounds are there in that deposit. And are there other pods of high-grade deposits maybe around there or further away from that initial discovery to say that there's something really sizable there. So again, they're still trying to answer those unanswered questions. What is there? Is it mineable? Is it valuable enough? And hopefully the people at Baselode Energy with James Sykes at the helm will be able to figure that out this summer. F3 is a bit of a different story. They and as we were talking earlier, I've owned F3. Back then it was called Fission 3.0 since 2017, and I was like frustrated with that company for a long period of time. I considered selling those shares so many times, but I met Dev Randhawa, the CEO, a few times, called him up, had a few conversations with them, and was just trying to determine, is something going to happen with this company? And finally, they didn't want to spend any money. They weren't doing anything. The conditions were just awful. So they didn't want to spend money in the ground and have good results and not be rewarded by the market. So it turned out to be a very, very smart move by Dev's part and the team. And they did raise some money when the conditions were good, like in 2021. And last year they went back to their project, Patterson Lake North, and they in their first hole last fall, they hit just outstanding results. Some of if not the best initial drill results in the Athabasca Basin. And so the share price really rose quickly. So, we were rewarded for that very quickly. They drilled 4 holes last fall, and 3 of them were mineralized and significant mineralization. So we know that there's something there. So they went back this winter, and again, the results were very encouraging. So now they're stepping out. They're trying to see, like, in what direction is this going? What dip is it going? Where is it? And they were able to do some modeling, and now they figured out kind of they have way more information now for this drill program. And so now they're continuing to step out. They're continuing to try to follow this thing along strike. It's pretty big. The system is pretty big. So what they're trying to do this summer is they're trying to determine exactly how big it is, but they're also exploring elsewhere on the property. They have other juicy drill targets that they're going to be looking at. So that I think they have 2 drill rigs up there. So I am really, really, really looking forward to these drill results from F3. They've got a great team there. They've found uranium before. They know how to do it. They're focused, and I'm, you know, pretty convinced that the results are going to be good. There's a report that came out on F3 yesterday where the analysts uh, think that there are chances that that deposit could be around 100 million pounds or bigger. Now, again, this is completely speculation, total speculation. But if you compare F3 to another story that extremely similar to F3 is another company that I had speculated in that really did well called ISO Energy. And ISO, I've told this story before, but when I started investing in the company, the market cap was maybe 30 million, 40 million. And so they were hitting very good drill results. And finally, they drilled enough holes that they were able to determine last summer that that deposit is 50 million pounds. And at today's prices, in today's environment with these equities, ISO Energy is valued, their market cap is 208 million pounds right now. So when you compare F3's market cap of 120, 128 million pounds, if F3 found, again, this is an if, finds a deposit that's the same size as ISO's deposit, mineable, a good deposit, it's reasonable to expect that F3's market cap would rise to the same value as ISO's market cap, which is $280 million dollars at today's prices in today's equity environment. What gets me excited about companies like ISO and F3 is that they're probably going to be really good takeout candidates. And if you look at the last uranium bull cycle from 2004 to 2007, back then, companies that were bought out because they had pounds in the ground, the average price that was paid for pounds in the ground back then was $10 a pound. So if you look at a company like ISO Energy with 50 million pounds in the ground, if a company wants to buy them out and they're a really good takeout target, by the way, their neighbor right next to their deposit is Cameco. Cameco is drilling right next to the border where ISO is. So, if Cameco finds something, chances are they're gonna want to buy out ISO. Like, I don't know, but it seems logical to me. But so if ISO were to be taken out, and we use 2007 numbers, which are going to be higher this time around, but let's say we use 2007 numbers at $10 a pound, well, then ISO would be bought out for $500 million. And they're sitting at 280 right now. But they're not going to be bought out for $10 a pound. No self-respecting CEO in today's uranium bull market is going to sell a company with a valuable deposit like that for $10 a pound. So, anyways, that's kind of what gets me excited. And that's how I do my math. And that's how I think about these exploits that have a deposit.
No, that is so exciting. I really think you're doing this right because not only did you buy at the lowest possible point in the market, essentially in 2017, but you've also just rode these stocks out. Like the chart of F3 uranium over the last 5 years is ugly, and you just stuck with it. And now in this terrible macro environment, you're actually getting paid. So it just shows the long-term vision, the discipline, the character required to actually invest right. It's hard. And so that's exciting about F3. If they do have 100 million pounds, they could get bought out for 1.5 billion, right? $15 per pound, something like that.
Again, that's a big if. Okay,
Right.
that's a big if. We
Right.
have absolutely no idea how big that deposit is, even if it's going to be mineable. So those are big ifs. So that's why it's speculation. But to me, it's reasonable that they're going to have probably 50 million minimum.
Right.
And at 50 million, if they're taken out at $20 a pound, that's a billion market cap.
Exactly. And what was so good about the hole that's causing people to think that there's so much in the ground?
Yeah, so the thing with the Athabasca Basin is that like the worldwide high grade uranium is below 1%. It might be 0.2%. That's considered to be high grade. That's the average high grade uranium throughout the world. So when companies come out with you get numbers in the Athabasca Basin of like 28% uranium over 2 meters. Like I don't have the exact numbers in front of me, so I can't tell you right now exactly what the results were. You could check it out on the company's website. But that's what makes these results like outstanding. So I think it's over 11 meters. They found the average grade over 11 meters. I really don't want to throw numbers out there, but it's something like 8% over 11 meters, where the world average is 0.2 of a percent. So that ore, like if there's enough of it, is really, really expensive because almost, there's a high percentage of it is uranium. So you don't need to move a lot of rock, a lot of, to be able to get high volumes of uranium. So that's what gets, that's why companies go to the Athabasca Basin. That's why people like me, speculators, and speculate and explorers in the Athabasca Basin, because these companies can become extremely valuable. The case in point here is NextGen Energy. I mean, NextGen Energy with their deposit, and the thing, they could have missed it. The deposit is shaped like almost like the Eiffel Tower underneath the ground. Okay, so they could have been off by 3 meters and not hit that deposit. But they found a huge deposit there. The market cap of that company at one point was over $3 billion. So that's extremely, extremely valuable ore. That's going to be a mine someday. It's going to be a very, very, very valuable mine, and it's made a hell of a lot of money for shareholders.
So, just thinking about your strategy here, you're diversified. Obviously, these are some winners, F3 in this environment. Since you are diversified, some of the other ones that haven't been able to raise capital might be lower, but overall, you're just trading like a basket of what you think are the highest quality names, and you're just riding out this uranium winter.
Yeah. So my strategy was, again, because 60% of my portfolio is in explorers, which is speculation. I didn't put all of my money into one company. I put my money into 9 or 10 different explorers, not knowing which one was going to hit or which one was going to be, to this day, which company is going to do the best, I do not know. It's impossible to predict. It could be, you could have the best run company with the best deposit, with the best economics behind it. But if the market decides to put all their money into one company because of X, Y, Z and drive the price of that market cap up, and you happen to be in that company, well, that's going to be your big winner for absolutely no reason at all. That's how the market is right now. There's just no rationale with the market. But so my strategy was find 9 or 10 of them that are good quality. And when I say good quality, it was good projects, good management that does what they say they're going to do, in good jurisdiction, with a share structure that's reasonable, not knowing what is going to do well. And I was lucky. ISO did well for me. Baselode Energy just did well for me. F3 did well, and Consolidated Uranium, which is not an explorer, but which was a really small sort of company when I first started investing in it, is doing extremely well for me, and I'm extremely excited about that company. They're going to do that's a sleeper. People have no clue that company might be producing uranium, next year or the year after, and people just don't realize that. But anyways, so that was my strategy, not knowing which one is going to do well, and luckily 4 or 5 of them did very well. I only needed one of them to hit it out of the park, and it would mitigate my losses. So that was my strategy with the explorers.
Exactly. And you're very humble talking about the loss in the uranium winter of this year, but you were up at one point 400% on this portfolio at the top when there were more favorable macroeconomic conditions. So it's proving itself out. It's just the macro environment that's throwing a wrench into things currently.
Yeah. So if I look at the amount that I invested at the peak in 2021, when Sprott started buying uranium off the spot market aggressively, the portfolio went up 400%. And so it was four times what I put in. And right now it's about half. So it's about twice what I put in. In the span of 6 years, I'm happy with that. And like, some people have said, well, why didn't you take your money out? Well, because the story had just begun at that time. Like there was just, contracting cycle hadn't started. Not, I didn't even talk about the demand for uranium that comes from financial players. Split really drove the price of uranium up in the fall of 2021. But we've had a new financial player that just entered the market last month, Zuri. So they started buying. Now there's news, Anu, which is Kazatomprom, and it's going to be starting up. Not exactly sure when, but they're going to be coming in and buying uranium. And there's news of at least two other financial players that will be entering the market to scoop up some of that uranium on the spot market. So, I mean, it's hard to believe, and I say this all the time, but it's just the spring is just getting tighter and tighter and tighter, and it's not fun to see your portfolio go down that much. And I understand people that are frustrated and really fed up, and but the story just can't get any better. I mean, it's gonna get better, I know, but it's remarkable.
Right. And that goes back to the long-term vision. I mean, like Jeff Bezos could have sold his shares when they 10x, but now they've 150x because there is a long-term vision in a story. And as long as you understand it, that's where you get the conviction from. And you're right. It is just unbelievable what is happening right now.
Yeah.
It could not get better for the nuclear energy space. So,
But it's going to get better. That's the thing. It gets better by the
right.
day.
It always does.
It's
Yeah.
not like who could have said last week that Michigan was going to put in their budget the money to restart Palisades. Like, you think Palisades is shut down, it's shut down. Like, oh well, but here it might start operating again, which going to generate who would have? Well, people we suspected that France would extend the life of their nuclear reactors, but that's huge demand. That's 54 nuclear reactors demand over for 20 years. It's
Yeah.
huge.
It's almost every country. So Japan, the United Kingdom, all nuclear renaissance is happening.
The hardest thing to do is to do nothing. That's
Yes.
something that we've heard a lot in the investing world. But for me, it's not doing nothing. It's validating the thesis all the time, like just all the time. Like, and when you look at the news flow, the positive news flow, I mean, I I don't want to, it's like I'm trying to convince myself, but I'm like, it's just too good. So we'll see. And I think it's also going to play out much longer than I was expecting. Because of when I first started investing, like I said, there was just absolutely, to me, it was just with the existing nuclear reactors, what does the outlook look like? And it looked really good. And since then, like, it's like the world has done a complete 180 on nuclear. And now, people are really understanding the role of nuclear, the benefits of nuclear, and then and understanding we absolutely need nuclear. And the proof is in the pudding with what we talked about here with regards to the extensions, the construction, all that stuff.
Exactly. I could talk about it all day long, but I appreciate you coming on. I love your portfolio strategy. You kind of created your own kind of very junior diversified ETF. that you're just riding? Because URNJ has some kind of the bigger companies. You like the smaller cap companies, which is very exciting. Obviously, it is extremely risky. Not financial advice, but it's just what you're doing. And it's working out. And I really appreciate you coming on and sharing it.
But it's my pleasure. And I've also like just to add something to that, the strategy was formed basically when I looked at, and it's out there, just Google it. There's a report that was prepared by Sprott in 2000, January 2007, where they did, a comprehensive report on the uranium sector. At that moment in time, the price of uranium was $70 a pound. And they did a comprehensive report. And they were predicting the price of uranium could go up to $100 a pound. And so that's why they were recommending the sector. They did a rundown of some producers back then, some developers, and some explorers. And I looked at when uranium was $70 a pound. I looked at the market caps of some of those explorers, and I looked at the market cap of the explorers now. And I'm like, there's explorers there that have market caps of 600 million explorers, and I'm looking at explorers now at 40 million. So and the price of uranium at that time when I started was like $18 a pound. So to me, it was like, well, this is kind of a no-brainer. If I really want those higher returns, then that's how I formulate my strategy of a basket of explorers. But this is speculation. It's high risk. It's not for everybody. I'm not telling you to go out and buy F3 or any other uranium company. That's just what works for me.
Yes. And I didn't mention, we talked a little bit about this, but I just have to throw in that this is a record year for SMR announcements, small modular reactor. It's a record year for contracting. And so the fundamentals short term are good too. It's just starting to just balloon. And so, like you mentioned,
As soon as these markets, as soon as the financial markets turn positive, it might be a confluence of factors here. Everything coming together for this sector could be interesting. I don't want to be overly optimistic, but to me, the upside looks pretty positive.